In this video, I'll be sharing a personal story about a business owner named Peter who made some common mistakes running his business that you can learn from. If you own a business, you'll want to watch this video. Later on, I'll share 3 common mistakes business owners make and how to avoid them. Hi, my name's Noel Lorenzana and I'm an accountant. Today I wanted to talk about 3 mistakes business owners make and how to avoid them. Before I tell you what those are, allow me to tell you a story about Peter, a business owner, maybe not that much different from yourself. Peter started a contracting business that went from $0 to $500,000 in revenues in under 2 years. That's pretty exciting. Sadly, his story has an unhappy ending. Here's what happened. Peter worked hard, a lot harder than most people realized. Like maybe you, he was building something with his own hands and he was proud of what he was creating. Slowly but surely, his business grew. His revenues were up and he was making very good money. You see, Peter knew the contracting business inside and out, but didn't know much about keeping his financial records straight, specifically bookkeeping, accounting, and taxes. He knew this was one of his weaknesses, and at the time, he just didn't care. Peter had 5 employees who did most of the hard physical work, and he had his girlfriend keeping track of the business expenses. So far, so good, right? Well, not quite. His employees were misclassified as independent contractors, his girlfriend had no experience with bookkeeping, and he was unknowingly paying his business expenses from his personal accounts. So you may see where this is going. For Peter, paying his taxes and keeping up with the bookkeeping wasn't a priority. He was focused on finding new business, managing his employees, independent contractors, and getting the work done to his high standards. He did really nice work. Before I tell you the 3 mistakes business owners make and how to avoid them, let me tell you about Peter not filing his tax returns. So he didn't file income tax returns for his business. He didn't pay any estimated tax payments, and his finances were a complete mess. Excuse me. Peter would justify things by saying, "I've got a business to run, I don't have time for any of that." So several years go by, and Peter gets a letter from a government agency, Department of Employment Security. They handle unemployment compensation claims for the state. They want to conduct an audit of his payroll records. It ends up one of his employees, independent contractors, filed a claim for unemployment compensation. This triggered an audit, as it often does. Long story short, he lost the audit and owed several $1,000s due to misclassified workers. Department of Employment Security shares information with other governmental agencies, specifically the State Department of Revenue and the Internal Revenue Service. It ends up both agencies issued their own audit investigations and demanded his tax returns that he never filed. They quickly determined his record keeping, i.e. his books and financial records, were incorrect and inadequate. They proceeded to examine not only his business bank accounts, but also his personal bank accounts. Because, remember what I said earlier about Peter paying his business expenses using his personal account? By doing so, this actually allows the IRS to look into those accounts as well. To wrap this up, Peter lost his business. He had to close it. He was $195,000 in tax debt, which included lots of penalties and accumulated interest, and he had ongoing tax problems, as you can imagine. That is quite a business horror story, and I don't want that to happen to you. So have you figured out the moral of the story yet? First things first, to avoid the 3 common mistakes business owners make. Number 1, hire a professional to handle your bookkeeping, accounting, and taxes. Doing your own bookkeeping can be problematic, especially if you don't know what you're doing. It's too easy to mess things up. This applies even if you're using popular online accounting software to maintain your books. If you don't know the differences between balance sheet accounts versus profit and loss accounts, you could be wildly overstating or understating your income. Both results will get you in trouble with the IRS. Number 2, don't commingle or mix your personal financial accounts with your business accounts. If your business is ever audited, you're opening the door to have the IRS examine your personal financial accounts as well as your business accounts. Keep them separate. It also makes things extremely difficult at year-end or tax time when you need to figure out your business income and expenses. And if you need another reason, For the record, I'm not a lawyer and this isn't legal advice, but if your business is an LLC or corporation, you can lose your limited liability protection, meaning that your personal assets can be exposed to financial risk. Why is this? There's a legal concept which you may know called piercing the corporate veil. This can happen when a corporation or LLC is not in fact operating as a separate legal entity as they are required to do. Bottom line, don't use your personal financial accounts in your business. It's a very bad practice. And number 3, file your tax returns correctly, accurately, and on time. Paying your taxes is a privilege. It means that you or your business actually earned money. So pay your taxes. Also, hire a professional to ensure it's done right. And remember that you get what you pay for. If you think it's expensive to hire a good accountant, just wait until you hire a bad one. Filing your returns also starts the clock on the statute of limitations. This is the amount of time the IRS can audit your tax return. Once you file a return, it can be audited for generally 3 years. I hope you enjoyed the video. If you did, please consider hitting the like and subscribe button. It means a lot and helps me grow my channel. My name's Noel. I help people who don't have their own personal accountant by answering not so common money, business, and tax questions. Thanks for watching and see you in the next video.